I think, after the strike, I'm getting even more older. My memory wasn't very good. So does this make sense? So basically, we are using the actual cost divided the actual quantity, right? So we are figuring out what's the price per quantity. Does this make sense? Okay, yeah. And then the next question is, what is the actual labor price? The actual labor price.
31.5.
31.5. How did you calculate?
154,350. That would be divided by 4,900 hours.
Very good, right? Because they tell us this is the actual result in January, right? How much cost, how many hours. So the actual price would be 154,350 divided by 4,900. So $31.5, right? That's the actual materials, the actual labor. Okay, and then next, what is the budget materials price? What is the budgeted material price? Per, budget. What's the budget materials price?
$4.5 kg.
Yeah, very good. Yeah, 4.5.
$5, sorry.
Yeah, because it has to be close to the 4.65, right? If you can't find it, you can see that number has to be close to this number, right? So I don't know. Okay, so the reason why I use the 45 because we are talking about the 10 kilograms, right? What's the budget? What's the budget, the labor price? So in the exam, you have to be able to analyze this information by yourself, right? Just read through the information and just to know what this information is about. Sorry, I interrupt someone. What's the budget labor price?
$30 per hour.
Yeah, very good. So $30 per hour, all for each lamp is 15, right? So $30 per hour here. You know this is the budget, right? This is the budget. Why you know this are the budget? So you see, it has set up the following standard per finished unit. Okay, so the following standard that tells me this is the budget. Okay. Okay, so now let's do this. Let's first do direct materials. So I'm setting up the left column. So I want to know what's the actual cost for my direct materials. What's the actual cost for my direct materials? It's given.
$4.65 times the 100,000.
Yeah, very good. Yeah, very good. So basically, they purchased 100,000, right, kilograms. Cost 465,000. So the actual cost of the purchase to purchase the materials is 465,000. Okay. Now I want to know this red column. I don't know my slides. So this would be a flexible budget, right? Flexible budget at the right. So here we are saying budgeted input quantity allowed for the actual output times budget price. So we are kind of thinking the same question. We are talking about materials. What's the budget price for the materials? And what is the conversion from the input to output. How many input do I need to get one output? How many materials do I need to get one lamp?
10 kilogram.
10 kilogram, right? And what's the actual output of the lamp? What is the actual output of the lamp?
9,850.
Very good. So 9,850, that's actual output. And you want to know how many input, right? Allowed. You times 10, right? And then what's the budget price?
4.5.
Yeah,
Per kg.
4.5. Very good. So that's why we are doing this calculation. Actual output times each output requires 10 input. That's the standard, and times the budget rate, 4.5. So this is my flexible budget number. Okay. And now I need to know the middle number. Tell me, how do I calculate the middle one? What is it in the middle?
Actual input quantity times the budget price.
Okay.
That's the method.
Yeah. So here is very interesting. Here in this situation, they were talking about the input price variance are isolated upon purchase. The input efficiency variance are isolated at the time of usage, right? So when you are dealing with materials, you have to be careful, right? Because purchase, usage, they are not the same, right? I can purchase, I can purchase like, let's say, I can purchase a cow, right? But how much I consume every day, right? I can't eat a cow a day, right? So you can purchase as much as you want, but how much you can consume, right? How much you will use it. So purchase is different from usage, right? Okay. In the previous example, so basically the assumption is that you purchase this amount, all the purchase is used. Okay. In this question, they are isolated. Okay. So here in the middle, there are two numbers. Okay. Two numbers. First, I want you to think about the purchase. Okay. What's the actual units purchased?
100,000.
100,000.
Good. And what is the budget price?
4.5.
Okay, very good. And now I want you to think about the usage, right? What is the amount of the production, right? The usage of the materials.
98,055 kg used.
Yeah, 98,055.
98,055 kg used. That's
Yeah,
written.
that's provided, right? In the middle, direct materials used, right? And what is the budget rate?
4.5, same.
Yeah, very good. So in this case, you have two numbers. One is called purchases. So you are using the 1,000, right? Sorry, 100,000. For the usage, you are using 98,055. Okay. So now my price variance, okay, for the purchase, right, is isolated on the purchase. So that will be taking the difference of these two numbers. And now in terms of efficiency, right, when you are thinking about efficiency, that means how efficiently you are using these materials, right? So it has to be the materials you are using. You can talk about efficiency, right? So therefore, when you are talking about efficiency variance, you are only dealing with the materials used, right? That's the 98,055, okay? So you can see there is a favorable variance in terms of efficiency, okay? Actually, you can see you are saving quite a bit of materials, right? Here, according to the budget, you are going to use 98,500 kilogram, but you are only using slightly more than 98,000, So therefore, you are saving, I think, let me see, do a quick calculation. So you are saving 445 kilograms, okay? 445 kilograms. Therefore, this is a favorable variance, okay? It's more efficient, right? In terms of purchase, the standard rate is 4.5, but it's actually costs you more. It costs you 4.65. So therefore, this variance is unfavorable, okay? So for each unit, you are paying 15 cents more. And for 100,000 units, you are paying $15,000 more, which is unfavorable, okay? And then you may want to ask, okay, what happened in the middle, right? What happened in the middle? Well, that one is sitting at the end of the inventory, right? The raw materials inventory, right? The difference would be 1,045 kilograms. These ones are not used. It's sitting at the end of the materials ending inventory, right? So therefore, when you do this analysis variance, you have different focus, right? If you think about the price variance, you are dealing with purchase, right? If you think about the efficiency, you are dealing with usage, right? Okay, so you can see this is a little bit different. Does this make sense? Just give me a second. Okay, 1, 2, 3. Does this make sense? Awesome. Good job, guys. Okay. Okay, so and then I will skip the number 2, prepare journal entries to record the variance. Okay, Robert, you have a question?
Oh no, I just pressed the other button.
Okay, yeah. Samarie, you have a question?
Yeah, I have a question. Like if I'm so sorry, that's my son. If a controller is analyzing this information, so which one, if he have a liberty to use the one which is favorable, right? That's how it is interpreted.
Yeah, this is the, let me see the question. The next question is comment on the January price efficiency variance, right? Your comment would be price, they are paying a little bit more, right? And the efficiency, they are doing a better job in terms of using the materials. So they have an efficiency variance. So sorry, maybe I didn't get your question. What is your question?
I just, if in case, if we are interpreting this results like price variance, then there is efficiency variance, right? So there are two components like purchases and usage. So a controller would be like he might be able to, use the information to its benefit, like what to present and what not to present. Is it like that?
Okay, yeah, so that's exactly what we are going to do with the third and the fourth question. That's a very good point. So we are going to talk about it, okay? So now let's move on to the question 3. You will get the answer in a minute. So, direct, this is only the materials, okay? This is only materials. So Samarie, I'm going to answer your question on the next slide, okay? So now this is direct materials. And now let's do the direct labor, manufacturing labor. So I know the actual cost is this number, 154,350, right? This is given. And in this case, what is the flexible budget, right? So I want to figure this out. So basically, I know each lamp will need 0.5 hours, right? And each hour is going to cost 30, right? So here, for the right column, flexible budget, so I use the actual output, right? 980.50 times 0.5 hours per labor hour per lamp, and times $30 per labor hour. That's the cost, right? This is my flexible budget. And in the middle, so for laborers, there's always one number, right? Only for materials, you can separate them from purchase or usage, right? For labor, you can't separate purchase and usage because there's no labor inventory, right? You have a materials inventory, but you don't have a labor inventory, right? Okay, so the purchase is always equals the usage for the labor. Okay, so here, what is this number would be? Can anyone tell me what this number should be?
4,900 into 30.
4,900 times
$30.
$30. Very good. Okay, sorry. So 4,900, that's the actual hours used, right? That's the actual hour used. Standard rate, that's the $30. That's the budget rate. So this one in the middle. So my price variance, that's the difference. And my efficiency variance is this. So what did you see from this picture? From these four variants? So it seems like the price variance is unfavorable. The efficiency variance is favorable. Okay. Are we clear with the calculation on this one? The calculation on this one, are we clear? Okay, good. So now the third question, we skipped the second one, the journal entry one. The third question is comment on the January price efficiency variances, right? So here we can see, okay, so you are paying extra money to pay for the materials, right? So that price materials is high. And also the labor cost is higher. You think it's $30, but it's like 31.5, right? However, you are doing a better job in terms of, you know, using the materials. Maybe there are less spoilage, right? There's less waste, right? Therefore, you are saving on the materials. But take a look at this, right? This favorable variance is 750. This one is 2000, right? 2. Okay. These numbers are not that significant, right? So the whole point here is sometimes we are trying to, you know, make some conclusions. The managers, Sam Marin was asking the question. The managers is going to rely on this information, right? The manager will be like, oh, you know, good job with the use of the labor time, right? So the labor time, because the efficiency, the laborers are more efficient in doing the job, right? See, you have a $750 favorable efficiency variance. Good job, right? For the whoever the supervisor, you know, give you some bonus. Maybe that's too much, right? Because this number is not significant, right? Sometimes it's just by random chance, right? You guys know, right? The Gaussian distribution, right? Sometimes it just happens naturally, right? You know, you have a positive or negative, a small deviation from the standard, right? Most people will drive like 110 on highway 2, right? That's kind of the standard. But you know, it's just normal, right? Sometimes, even though you are a law compliant, you are a very good citizen. You never try to exceed the speed. But occasionally, right, it just happened randomly. Maybe you just over the speed, right? Or sometimes you are slower than the speed, right, limit, right? So the point here is, if it's a small variance, you don't have to make a big deal of it, right? As a manager, you notice, whoa, you know, $700 favorable variance, you know. So the whole point here is you want to also recognize that, you know, favorable variance, if it's not significant, does not mean good behaviors. It just can happen randomly, right? So in some companies, maybe you try to tie it in the performance benchmarks, right? Evaluations, you know, into this kind of analysis, but you just want to keep that in mind. $2,000 favorable, 750 favorable, right? Are these really significant enough for the managers to make a big deal of it, right? So those are the things for the qualitative discussions, right? And Sam Rin is asking a very good question. Makiko.
Yeah, so when we consider both the price variance and efficient variance, and overall is unfavorable, right?
Yes. Yeah.
Just wanted to make sure it's
Yeah.
efficiency. It's a little bit small amount of favorable, but
Yeah.
overall is
Yeah.
unfavorable.
Yeah, so what happened here is basically, let's use the materials as one example, right? The reason why they kind of isolate the price variance and the efficiency variance, maybe these are two different responsibility centers, right? So you may just have the purchase department, and they are responsible to get the best deal, right? To try to keep the price low. That's how they are evaluated, right? You have the maybe the production department, right? They really try to keep the cost under control. They try to reduce the percentage of the waste, right? So maybe the price variance will be for the materials a way to evaluate the purchase department, right? And the efficiency variance is the way to evaluate the production department, right? That's why they are separate. When you do the analysis, you have to separate the two in isolation, right? They probably belong to the different responsibility centers. Does that make sense? So therefore, what I'm trying to say is for the production department, even though they have a small favorable variance, maybe it's not a big deal of it, right? And for the price variance, you know, when you are purchasing, right? If you think about the increase, right? 15 cents over 4.5. What's the percentage of that, right? Probably only a small percentage. So it's probably not a big deal either, right? The price fluctuated, right? Sometimes it's beyond the control of the purchasing department, right? It's only when sometimes it's really significant, right? Flagging some kind of internal control issues, they will try to make a big deal of it. Does this make sense?
Yes, but one quick question is when you evaluating what is insignificant or significant is based on the net incomes to compare to the percentage?
It's based on the contract and also the what's the nature of the center, right? You have profit center, you have cost center, right? You have different responsibility centers, right? So if this is the purchasing department, they are trying to keep the cost under control, right? So if let's say if they paid $5, they paid like $5.50, right? They paid the actual $1 more. That's probably something you want to investigate, right? So the budget is $4.5 per pound, and you are purchasing $5.50 per pound. Is that because you are buying from your relatives, from your family members? You know, you have to investigate, right? That's quite significant, the $1 change, right? But 15 cents, is that significant? I mean, it's very subjective, right? It's the manager has the discretion to consider what is significant and what is not significant.
Yeah, if that the price it's a little bit more, but if you get more efficiency out of it, then you can kind of justifying it overall, right? And
the efficiency is yeah. Sorry.
When it's in the sorry.
The efficiency is probably not their responsibility, right? They are held accountable for purchasing, right? That's their job. Find the best deal, right? Keep the price low. So efficiency is not their job. This is not their responsibility, right? So,
okay.
Yeah. So that's why they probably evaluated it separately, right? That's probably why they even break it down, right? Because otherwise you only have a flexible budget variance, right? Why would you go into this level, right? To see the partition, right? So did I answer your question?
Yeah, yes.
Okay.
Yeah, but it's still sorry. Just went to how you can consider it's insignificant for that the total amount of that was unfavorable.
Mm-hmm.
It looks like it sounded like your explanation was just going back to that the unit price difference,
Mm-hmm.
but it's an overall effect is based on the amount that was actually sold, so that it's supposed to be in a comparison with the effect on the net income.
So we are saying here, the actual cost will be 15,000, right? And is that significant? The manager will decide, right? You know, is this because of the market, right? For example, because of the inflation, because of the war in Ukraine, right? A lot of the commodities price going up, right? So then if you see an unfavorable variance, that's normal, right? You can't blame on your people. It's just the economic situation, right? So I mean, that's a decision to be made by the manager, right? And the manager has to know what they're doing. Yeah. AJ?
Yeah, so overall, we would say that the effect is favorable, right?
Overall, I think it's unfavorable if you consider the cost, right? So basically, when you add the unfavorable and the favorable, the net would be unfavorable, right?
Oh, yeah, sorry, my bad. I was reading that
Yeah.
backwards.
Yeah, but to me, I mean, these numbers are not significant. Yeah. Okay, any other questions? Okay, so this is just the answers I already mentioned, right? You know, they have different separate control centers, responsibility centers. That is why they are referring to different points, right? It has to be, the calculation has to be fair, right? The calculation has to be fair. If I'm responsible for the efficiency, I'm only dealing with the reference point of the usage, right? If I'm responsible for purchasing the materials, I'm only responsible with the reference point of the amount of the purchase, right? Not the usage, right? So, okay, so I'm going to stop this.